It is a Market Beast edition. Yes, it is your fellow competitor speaking. About 8 months ago, we made a video post on the US30, making a $41,000 price prediction. Things have changed. What we're going to do on this video is give you guys the alternative levels, as we only had one level that the weekly candles should have stayed above, and unfortunately, that has not happened. So we'll get into the specifics here in this video, give you a time frame. If I'm still seeing this trajectory to the upside, as you're still in the bull market levels, etc. So that's what we're going to explore in hopefully a short video. So let's do it, guys. Welcome back, loyal family. If you're new here, we only explore price action. Thanks for sticking around. I'm loyal subscribers. Let's go ahead and dive right into the charts here. Shall we? So today's October the 28th. 2023, and the previous close of US30 is going to be $32,350.13. Slightly negative close, 1.3% for the day. Okay. All right, you lovely ladies and gentlemen. It's been so long, right? Let's get into the original lines. Nothing has changed. There it is. All right, so what you are witnessing on the screen is what we were looking at in the past, right? So back in 2016, I think it was, as we scroll back here. We're looking at weekly candles, by the way. So this is what we were referencing to what had the potential to happen present day if you're new. So we were just kind of looking at a bullish divergence. Let's pull up the RSI here. So as you can see, the lower portion of the screen, this represents the RSI. We noticed a divergence that we have an indicator for that we saved on tradingview.com. We received a divergence indicator where the RSI is making higher lows while the price is doing the opposite, and that is in the bullish indication that the price may, right, that's the operative word, may actually move higher. So again, back in 2016, that's what we were just kind of using as a reference point to see if it could potentially happen again in the future. And so far, there has been changes, well, just like one change, right, to what we are comparing it to. Again, first thing, bullish divergence, price in comparison to the RSI. Second thing was for it to, I think, break the previous high or something like that. And then, of course, the third thing was for it to stay above the 0.382 level on the Fibonacci retracement level. We made a video post. Hopefully, I leave a link for it. I don't want to spend too much time on that. I really want to just get into the specifics here. But, you know, for the new guys and gals who are joining us, just want to give you a brief overview of what we're comparing this to. All right, 2016 gestures compared to present day. All right, so let's get back up here. So far, yeah, it is not playing out. Something is different here, guys. So as far as I'll go ahead and answer that question. The $41,000 price target before the end of this year for the US30, that is not going to happen. That actually, we already crossed that out back in March, guys, because the only thing we were looking for was for the price action, weekly candles, to stay above this yellow line here, which is the 0.382 Fibonacci retracement level. If you're not familiar with Fibonacci retracement levels, please kindly do a brief research, come back, it'll make a little bit more sense. We measured the fib from the lowest point here at October 2022. Hopefully you have your charts up there. And we measured it to the, I think, high right around here on the weekly of December the 5th, 2022. Is that about right? Yeah, it looks about right. Okay, so just to kind of, give you a brief understanding of what you're looking at. So this is kind of a continuation of a story if you watched the previous video or follow us closely. So far, no good. It does not look, the only thing that we have at this point is the divergence. We still have the divergence with the RSI in comparison to the price. So that is a good check mark. Okay, I guess we could say that. The only thing at this point is it won't be identical. However, we do have alternative levels. Okay, identical meaning that it would have stayed above the 0.382, which is, hopefully you can see here on the screen, right? This yellow line right about here. Okay, that's the 0.382, which is $32,550. Okay, we've been very consistent about this. Here's a video post back 8 months back when we said, will the market crash this year or not? I don't think, we were not crash callers in this video, guys. It was very a bullish standpoint that we were suggesting in this video, because the overall trajectory is actually still to the upside. believe it or not, as the market has closed 1.3% down. Now let's get to the alternative levels. And if you're looking at this 364 days, this just measures how many days or approximately that the weekly candles were hovering above the 0.382 level, the only level that we've been just kind of exploring here over the past months, even up to a year. And again, we got two crosses here as it is closed below the 0.382. So I'll give you two levels. I don't want to make this confusing, guys, but for my extreme technical guys who follow me closely, the actual level that would make me or suggest that the market is showing financial strength for the buyers is this level right about here. Okay, so that level's at about $31,858. If you're not experienced in technical jargon, right, or this interesting stuff that we go over, don't worry about this level. But for those of you who are inclined about the technicals or the interesting information rather, the 31,858 level is the level for the weekly candle to close above moving forward here for the bullish case to play out and potentially still have the opportunity to move up to the $41,000 price target. So hopefully you caught that. Okay, I'll explain a little bit more to detail here. And the only reason why the charts are choosing that level. I'm not just picking that level out of the sky, guys, because if you look back here, the only thing I'm looking for is higher highs and higher lows. Yes. And before we even explain that, let's back out so that we are all clear about the trend in this market. Okay. If we back out, we're looking at weekly candles. If you're looking at the screen, hopefully it's very clear to see that although some may be calling for a crash and the market closed down 1.3%, that is, not ideal for the bullish case, right? However, the market is still well intact and the market is still perfectly confined in a bull market and it is up trending. Okay. That's not my opinion. That's what you're looking at on the charts. Okay. So let's be clear about that. First and foremost, this is a up trending bull market. All right. So now that that has been established, let's get back into the interesting analysis here. As I'm seeing, it has closed twice below that 0.382 level. Yes, this is the second official close below this previous weekly candle. As long as the weekly candles don't move as low as this red candle right here, guys, pull up your charts, please follow along with me. It is March the 13th, 2023. The lowest level that it reached on this candle, according to the 8-cap information. I'm looking at the 8-cap chart on tradingview.com. It is $31,431. Okay, about 82 cents. All right, but just put 31,431 as long as this weekly candle, and moving forward here over the next 2 to 3 weeks, as long as a weekly candle does not get as low as, not close, guys, as low as, so that means within the week, any week, the following weeks, next 2 to 3 weeks or more, as long as the price does not move lower than $31,431, and we can get a close above the red line, 31,000 and about 824. I know it's a lot of numbers, guys. Remember, we're getting technical here. As long as it closes above that level, 31,800 about $31,800 about $40. If we can get a weekly close above that level and it does not reach as low as the level we went over, 31,431, then it appears that the buyers are holding the markets up in preparation to move the markets higher here in the short term, as long as the weekly candles are doing exactly what I just explained. That sounded extremely confusing even to me, but rewind it back. The information is there, but let's not get so technical. The only thing you really are looking for as a long-term participant here is just a simple next level down on the Fibonacci retracement level. I'm not saying it will reach this level, but however, in the worst case scenario, if it does, you're going to look for $31,049. Really simple. Okay. That is the only level that we're looking for. Pardon the guys who are extremely technical, but that's the one level, guys. 31,049. That's what we're going to close this video out with. All right. 31,000 and about $50. All right. We're looking for weekly candles to close above that level. And that would suggest that the financial market and the health and of the overall uptrend is still perfectly intact. All right, $31,050. Sorry, $31,050. Okay. All right, so that's pretty much, what is it? What is the trend? Trend is up. We went over that. Is it time to buy or sell? So I do think that since we are staring at an overall uptrending market that we've already explored, right? You must remain bullish in this market. That's right. I said remain bullish in your sim account. This is not financial advice. You will continue to buy until the market suggests otherwise. Of course, measure your stop losses according to your investment strategy, whether you're a long-term, mid-term, or short-term participant. I just gave you the level, the technical guys, but forget about that. If you're technical, explore it. If not, just $31,050. Okay, that is the level you're looking for, a weekly close above, and that would be the entry point if that were to take place over the next 2 to 3 weeks. Yeah, let's start with 2 to 3 weeks. Okay, $31,050. Okay, as a point of entry to maintain the strength of the bull market. That's right, bull market, up trending market. All right. And I think we covered everything. What's the time frame? So levels in the time frame. So we went over the levels, $31,050 potentially over the next 2 to 3 weeks here. Time frame, 2 to 3 weeks. If it doesn't take 2 to 3 weeks, I mean, just as long as the levels are respected, guys, from the weekly candles, if it's closing above that level, then you have to remain bullish in this market. Yeah, despite of whatever any news or anyone's saying. So that's the level, guys. That's the only level that we're going to close out the video with. Summary here: the market is still bullish. The market is still uptrending. One thing, I don't want to sound like a super perma bull, guys. I'm not. That's not me. The one thing I will say is, as of recently, there has been a lower high. So if you're looking at the charts, and we'll close it out here. We're almost done, guys. January-ish, well, January the 3rd-ish, 2020 was the highest point in that weekly candle. Unfortunately, for the bulls at least, it looks like there has been a new lower high. Okay, so with and kind of this overall consolidative phase that you're looking at here, if I can pull it up. All right, because again, it sounds like I'm extremely bullish on this video. I'm not, guys. I'm just exploring the levels here. But if you're looking at this kind of range of price action, you'll notice that there was a lower high printed. Unfortunately, okay. So, well, again, unfortunately for the bulls, I'm not a perma bull. All right, there's that lower high right there on approximately August, the beginning of August 2023, in comparison to the highest point. All right, so that is not a bullish sign. But again, the market is still intact, so you have to remain well within the trending market as a strategic market participant. Okay, so and that is buying opportunities. That's what you would look for in this market, as long as the levels are respected that we explored. 31.5, that closes out the video. Just one level. Okay, guys, and that is pretty much it. Hopefully this update is good. Market still looks bullish to me, as long as the levels are respected. And that is the update that I wanted to stop and let you guys know. So hopefully you guys enjoyed that, and hopefully it was enough information for you. So that's the end of the video. If you guys don't mind doing me a huge favor before you go, by simply leaving an appropriate thumb, I'd appreciate it below the video if you enjoyed the content. And leave a comment so that the YouTube algorithm can promote the video on the channel. Thank you for your continued support. If you guys are new, we also explore from time to time, right, the alternative markets, just Bitcoin for now. So if you can kindly join us here on this interesting journey, we'll send that out to you momentarily. Welcome in. I'd like to take this opportunity to thank you all for your time. Remember to always have a strategy in the financial markets, okay? And keep that positive energy flowing. We'll talk soon, and bye for now, guys and gals.